Good morning, everyone, and welcome to this session of virtual coaching classes organized by Board of Studies. And this is after a break. We are starting with the final level classes on the subject corporate and economic laws. So I'm Unwind Khandelwal with the qualification of DISA and insolvency professional and a registered valuer, taking you through the next 4 classes on the subject of corporate and economic laws, where I'll be covering the topic of winding up, the latest introduction in the last 2 years under this law, and then we'll have some discussion on miscellaneous provisions and the SEBI part. So I hope you're all joining in this winter morning, especially for those who are from the northern part of this country and the northern eastern part of this country and central part of this country. And for people down in south, maybe the winters are not so cold, but still I think you are feeling the colder part of this winter season. So it's great to have you early in the morning. And that shows your dedication. And let me tell you, important things, friends. We are all motivated. The most important aspect of being motivated is fine, but then consistently motivating is the key factor. So you have to be consistent each and every day. Then you'll see the impact at the final day. So, friends. Our topic for discussion for the next 2 sessions, that is today and on 31st, will be this topic of winding up. Now, winding up has been there in the previous Companies Act also. It has been incorporated in the New Companies Act. And it is again related to one of the factors in insolvency bankruptcy code also. So very important, friends. What we need to understand is how winding up under Companies Act would be different with respect to the liquidation under insolvency bankruptcy code, and how the process will be taken forward here. So if we have people who can just message me a good morning on the question box query list so that I can understand how many people have logged in and watching this session live. So we have Geeta Patel. Yes, good morning. I can assume that she's from the Western region. And Ramani from Southern region. Yes, okay, great. So you can keep on raising your query as we progress during our lecture. So friends, winding up will be divided into 2 parts under this chapter, where we have part 1 and part 3. So obviously the part 2 is missing out here because it has been omitted because of the introduction of the IBC code. So therefore it is not required to be studied. So we have the part 1, which will be covering from section 271 to 303, which will talk about the process of getting the company under the winding up process and the powers and the duties of the liquidator. And then 324 to 358, again in those sections, we have certain elements which are not required to be studied. But then 324 to 358 will cover how the assets are going to be distributed in case of winding up. So there are 2 important angles. One is the process, the admin part, the administrative process of winding up. And the second part is the distribution process, where how things would be distributed and how company would be closed down eventually after the whole winding up process is done. So we'll be covering both the parts first, today we'll be covering the first part, and then the next session will be on the distribution part, which is more bit of calculative and more in relation to collection of money and how that priority of amount has to be given. Yes, good morning, Mr. Sairam, and good morning, Mr. Sujata. So Western region and Southern region again. So we have combination of WR and SR. I can understand from people from Northern region, difficult to get up early morning and logging on to hear the lecture in a very cold wave going on. Okay, friends, so winding up, we let us understand that why winding up would be required and what could be the events which could lead to winding up. So one is compulsorily winding up. I mean, compulsory winding up where by force, by virtue of any event, by virtue of government giving instructions or giving orders that the company should wind up. So that is a compulsory winding up, which may happen anytime during the lifetime of a company. The second, which is very common and which we all think that should lead to winding up, is the inability to pay debts. Where the company is not able to pay debts, then the company may be wound up. And third is when the company thinks that, yes, they don't want to run the business and probably it's time to wind up the company. So that is voluntarily the company comes up and says that, okay, Tata, I'm not interested in carrying on the business, so let me close down. So that is the third situation where winding up may be required. So all these three conditions, if you have studied IBC, if you can just give me a message that, yes, have we covered IBC so far in your course content, then probably it will be easy for you to relate it to the IBC code also. And if not, then I'll give you certain hint in between when IBC would be invoked and when not. So we have three situations: compulsorily, inability to pay debts, and voluntarily. So now all these three parts have been covered under both the Act, Companies Act, and the IBC part. So in every situation for a company, if it wants to close down, the possibility is there. Now, when you understand that why winding up would be required and why this whole act and this process, because it has been observed in the previous acts that even in the previous Companies Act, where winding up was mentioned, but then the process was so cumbersome, it used to take about years to wind up the whole company. Years. So it would take about maybe 7 to 10 years to close down a company. But under the new provisions, I think the rules, the sections have been framed in such a manner where the company would be wound up not in a very fast manner, but yes, it won't take that much time which was being taken in the previous act. So maybe it takes about 2 to 3 years now to wind up a company, taking into consideration all the litigations and the process of the court. So along with the conditions when the company could be wound up, the other parts are the procedure, the administrative part, where we'll talk about the appointment of the liquidator, the how to take over the assets, the formation of the committee. Then there are specific transactions, how to tackle with those specific transactions. Let's say where we have transactions where there is some preferential transactions done by the management in favor of certain people, relatives or directors, then how to deal with those transactions where assets have been transferred at a lesser price, where goods have been purchased at a higher price. So how to deal with those transactions. And then the rules have been framed, which came into effect in 2020, that there are about 25 to 30 rules which are there for winding up, and the formats, the forms have been mentioned in those rules. So wherever in the section it has been referred to as per the desired format or as per the rules. So the rules have been notified, and they have become effective from 1st April 2020. So before that, probably you will not find any case under winding up under the New Companies Act. But post 2020, we have seen few cases being filed at NCLT. Remember, for the winding up petitions, the jurisdiction would be NCLT. There are few cases which have come up for winding up under NCLT after April 2020 once the rules have been notified. So this is the whole view. Okay, so IBC has not been covered as the students have been mentioning. Never mind. I mean, we're not covering IBC, but wherever required, I'll just give a hint about IBC also. Now, in terms of marks content, I think, yes, very relevant for all of us to understand, yes, that much important is to be given to this subject or not. So my answer is yes, we need to give that much importance to this particular subject, in spite that the coverage would be around 4 to 6 marks. That is maximum. That is on the higher part is 6 marks, but minimum I think that 4 marks question would be asked. Now, why I tell that it is very important for us to go through this particular topic is because as of today, you will not find many case studies coming out of this particular question. That means no practical situations could be asked in the exams, except for that hypothetical situations could be created. Obviously, that is left to the imagination of the person who is preparing the question paper. But currently, if you see number of cases under winding up, there are very few. So you won't find any indirect question coming up referring to any case law. So most of the questions which will come will be directly from the sections, extracting the provisions of the sections and asking you the provisions of the section. So in comparison to other topics under the same chapter, same subject, let's say for directors, board meetings, remuneration paid to managerial person, and other related provisions under the company law, I think where there is a high probability or 100% probability these questions are of technical nature with a lot of references to different case studies, maybe here it may not be the case. So you have a high probability of getting good marks. That is the biggest advantage which we see under this particular chapter. So as a student, I think we need to strategize our preparation and understand where we need to focus more and get high marks. So this is one chapter where we can focus where probably students don't focus. That is the way you need to strategize yourself, because these are the subjects which normally are leftover subject, the residual parts of all your course content. And if you want to get good marks, you need to concentrate more on the residual part of the course content. And this is where you have to concentrate and get good marks. So 4 to 6 marks questions, including the MCQ parts. So please do concentrate on this particular chapter. And I'm sure if you understand the process with some technicalities in between, I think the chapter would be very easy for all of us to understand. Okay, so let's unwind and get into the world of winding up. Unwind is that let's remove every aspects of whatever you have studied so far with respect to closing down of company, because here the new provisions have come up. And let's start fresh to understand how to close down a business. Okay, so winding up has been defined under section 2, subsection 94, where all the definitions are given. So it has been mentioned that winding up refers to winding up under Companies Act, and it refers to liquidation under IBC. So there are two definitions, two parts of this winding up. So whenever the word winding up comes up, so you can always refer that it will be under as per the Companies Act, which we are going to study. And if it is under IBC, it will refer to the liquidation part, which you are going to cover in your IBC content part. So even in the Companies Act, it is referring to the liquidation under IBC. Now, referring to the Companies Act winding up. So we'll be focusing on this particular part, and we'll start with section 271. So 271 is the trigger section where the conditions of winding up have been listed down. When can the company be wound up? So what are the situations where the company could be wound up? So there are 5 situations, and this is an exam question, friends. Exam question directly can be asked. 5 situations when the company can be wound up. So remember, very important, and there could be certain extra situations could be asked in the exam with respect to these 5 particular points. So let us discuss each point. The first point is when by special resolution, the company resolves that the company should be wound up. And we all understand the conditions of special resolution, and we are all aware what are the special resolutions, what are the criteria of special resolution. So that means the company would call for a meeting, and in that meeting, by approval of the shareholders with the minimum criteria which is required for a special resolution, then they will resolve that the company may be wound up. And then what could be the possible reasons? It could be the possible reason that the company does not want to carry on the business now, and it says that now they are not interested in carrying on the business. Let's close down the company. That is a possibility. Or let's say there's a foreign company which has got a subsidiary in India, and the foreign company thinks that now it is not worthwhile doing business in India. As we have seen in newspapers, a lot of businesses have closed down. Even the big companies have wound up their businesses because of certain reasons in India, especially the automobile companies have closed down. So then by special reason, they resolve that the company should be wound up. So therefore, they will apply. The second is on just an equitable reason. Now, on just an equitable reason that the company would decide? No, maybe the company would not decide. Maybe the other parties, the other stakeholders may find that, it is just an equitable now for the company to be closed down. Let us understand the reasons. We'll understand the reasons, what could be the possible reasons of just an equitable part. The third is very evident, and it actually should lead to winding up, where the company has defaulted in filing financial statements or annual returns. We all know that the company has to file annual returns. I think section 92 or section where the requirement of filing annual returns are there. Then, so filing of annual returns for immediately 5 consecutive financial years. So if it's not there, then the company can be wound up. So that means under a default situation. So if the company is defaulted, obviously who will take the initiative? Maybe the government will take the initiative to file for winding up of the company because they now found that the company is not running any business. But are you aware that what are the other possible before the company may be wound up? If the company is defaulted, I think there is another possibility of striking of the company. Remember, so that is also one provision which we will study in miscellaneous provision, where the company could be strike off. So first step would be the striking off, and then probably the ROC may think that the company should be wound up also. Okay, the fourth point is very natural, and it should happen where the company has acted against the interest of the sovereignty and integrity of India. Maybe where you find that the company has indulged in certain acts which are leading to leakage of secret information, defense-related matters. So they are acting against the interest of the country. Then the government thinks that the company should be wound up. So there may be situations where it may lead to, in the view of the security interest of the country. And an application by the registrar or any other person authorized by the central government. Remember, the word state government is not here. So on the application by the registrar, and if the central government authorizes any other person. Now, when this situation may be arising, maybe if you have studied the subject of investigation, inspection. Now, during investigation, inspection, it has been found that the company has been indulging in fraudulent transaction. Then based on those reports by investigative agencies and registrar or any other person authorized by the government, now thinks that the company should be wound up, then they will instruct the ROC or any other person that to file an application. So because of virtue of certain other activities or other inquiries carried on in the different sections, the final outcome could be the application for winding up. Now, so these are 5 situations where the company could be wound up. Why? Very simple situations. Now, only thing which needs to be discussed is on just and equitable, which is very subjective. These are not very specific, because otherwise the third point is very specific, where the financial statements, annual returns have not been filed. So that is very specific. So that is taken care of. So this is very specific. This is very specific. And this is again on by virtue where the central government thinks that the company should be wound up because of certain investigations. So this is specific. Now, this is very generic, subjective, which has to be discussed. And this is again a voluntary step taken by the company. Now, the situation is, friends, what about creditors? There's no such provision mentioned about creditors. That can the creditors come and apply for winding up of the company? Is that a possibility under Companies Act? So the answer is, friends, yes, there is a possibility, but not under Companies Act. So here comes the sections or the provisions of IBC. So IBC is primarily concerned with the creditors angle, not the state government part, the sovereignty part, the non-filing of returns part. So if there is a default to the creditor, and if the creditor thinks that the company should be wound up or liquidated or any other process under IBC, then they need to approach the IBC code and take the initiatives, not under Companies Act. So creditors per se don't have any role here under the Companies Act. Remember, so that is the major difference of winding up under Companies Act and liquidation under IBC. Because here there's no such mention of any person. Remember, there's no such mention of any person can file an application. Very specific, it's by the company on just and equitable ground, where the tribunal may be thinking, or default in the financial statements against the sovereignty. So there the creditors don't have any role, and by the central government. Now, what could be the possible situation of just and equitable? The possible situation where the tribunal can think that there is severe oppression. So you must have read the section 241 to 42, operation and mismanagement. So when this particular situation may arise in front of tribunal, so somebody might have come and filed an application for operation and mismanagement. And when the tribunal keeps on hearing all the discussions going on for operation and mismanagement, then they may give a conclusion, yes, it is now just and equitable to wind up the company. So that is one possible situation. The second situation, which is similar to operation and mismanagement, is a deadlock between the management. There's a deadlock. Now, they think that now the company cannot be run because the management, or there are two sides of the management who are not willing to listen to each other in spite of all the mediation and arbitration process being done, but there's no one to listen, and the tribunal thinks now it is time to close down a company. Or it's a bubble company. Now, what is a bubble company? Our friends, there are a lot of shell companies which have been created, and those shell companies have been created for certain specific transaction. The bubble company is just like a bubble. It will burst any day and without any objective of the business, though objective has been defined. But then these are all shell companies which have been created just to hide the main company, main transactions. So maybe because of the hidden nature of the company, the tribunal thinks that the main objective is something else. So therefore, the company should be closed down. They are referred to as bubble or shell companies, friends. And there are about thousands of shell companies currently registered with ROC, and the government is taking steps first to deactivate those companies, and then maybe later it will apply for winding up of the company. Then the company is carrying certain unlawful activities, dealing in businesses of drugs, maybe something like that. So if it is engaged in some unlawful activities, smuggling of products, goods, so then the company should be wound up, because the tribunal comes to know of the fact that these are the transactions carried on by the company. And the last point, which is relevant to exam point, friends, there are few questions which have been asked previously, is on the concept of loss of substratum. Now, what is loss of substratum, friends? Where the the object of the business is now over. So let's say the company has been formed for a specific particular object, which has now been concluded. Let's say the company has been formed for a particular project, and the project has now got completed. So within a time frame of 5 years, 6 years, the project has got completed. Now there is no such object left to be completed by the company. So when there's a loss of substratum, then the company may be wound up. So when the main object of the company has been achieved or defeated, whatever the case may be, the company may be wound up. Or maybe because of virtue of, let's say, by certain regulations of the government, which now tells that you cannot do such kind of businesses in India, then the loss of substratum is there, and therefore the company should be wound up. So these are the possible reasons of just and equitable, friends. So this is a probable exam question, friends. Just and equitable, what could be the possible situations? Though it is not mentioned in the section part, these are all ancillary things, additional things. Severe operation is basically where you find that there is an minority shareholders raise an objection that the main stakeholders are not taking care of the minority shareholders, and they're not running business as per the desired agreement between the majority shareholders and the minority shareholders. So the minority shareholders feel that there is a lot of mismanagement and operation against them. So therefore, the company should be wound up. So that is a case. So this is a dispute between minority shareholders and the majority shareholders. I hope your query is solved, Mr. Sairam, right? So that is the first part, friends. The conditions where the company could be wound up. Now remember, these are the initial sections which are quite high probability the examiner might ask these type of questions. The second question which will come in, that who may submit a petition? Now, when the conditions are triggered, who is eligible to submit a petition? So there are 2-3 people who can submit a petition for winding up, not anybody. Now, who are those 2-3 people? Remember, friends, is creditor allowed to submit a petition in the winding up process? I think that should be very clear in your mind. The answer is no. The creditor is not allowed under Companies Act. He has to go to the IBC code. So the first person who comes in is the company itself. Now you would say that how can a company itself apply for winding up? Remember the first condition? By passing a special resolution. So obviously the company can file a winding up petition when the special resolution has been passed in, and now they authorize the company, authorize any person on behalf of the company to file the petition for winding up. So that is the first situation. So therefore the company is allowed. The second part, which is very important, friends, the element of contributory or contributories. So this point will always again come up when we'll study section 286, where the list of contributories are prepared. So any contributory or contributories. Now, who is a contributory or contributories? So in simple words, if you want to understand contributory, he is the member, the shareholder, right? So we either term it as shareholder, as a member, or he is also termed as a contributory. So what is the difference between all these three terms? See, the difference between member and contributory is only a bit of technical difference in terms of the legality. As such, in common parlance, we'll always treat them as one. When the company is running, probably he's termed as a member. But as soon as the situation of winding up comes in, that member is known as a contributory. That is the point of demarcation between member and a contributory. Why the word contributory? Because he has to contribute to the assets of the company in case of winding up. He has to contribute to the assets of the company in case of winding up to meet out the liabilities. That is why the word contributory comes in. Now, why would he contribute? Because his liability is limited or unlimited? Obviously, his liability is limited to the extent of shareholders, the shareholding he has in the company. But yes, if he has not contributed to the full extent, he has still yet to contribute because he has made only a part contribution. Then for the remaining part, he is liable to contribute, right? So when you are holding partly paid up shares, we all understand you are holding a partly paid up share. So for the remaining part, you are still liable to contribute to the assets of the company. Therefore, he is termed as a contributory. So the contributories can also be of two types. One who has fully paid the amount, then he is not liable to contribute to the extent to the assets of the company, but he is still termed as a contributory. And the second is when you have only made a part payment towards your shareholding, then you have to contribute for the balance amount. So I hope the difference between the member and the contributory is clear. Promoters, Sairam, promoters, promoter is something different. Different in terms of promoters are also shareholders. Promoter are people who have just started the company. That is why they are referred to as promoters. Otherwise, in terms of Companies Act, they are shareholders. So there is no such different category of contributories. So they are also a part of contributory. So they are also shareholders. So they can also apply. So what are the situations where these contributory can come and apply? Probably when they think that it is just an equitable. There's a lot of operation mismanagement going on. Just an equitable to apply. The company should be wound up. So that is a situation where the contributories can come in. So even that promoters are part of this contributory. I hope it is clear, Sarah. Then third is all or any of the persons specified. So it could be everybody coming together or any of the person, any individual can also come in to apply for winding off of the company. Then the registrar. The registrar, remember friends, when you see that this situation, when you see that there's a default in filing of financial statement, or it is referred to an application made by the registrar, or because of an investigation under 210 and 212, then the registrar has the power to apply to the tribunal. So under these situations, the registrar can come into action and file for an application for winding up. Then any person authorized by the central government, obviously, central government can authorize in 271E again, as we have discussed. And if it is falling under this clause on just and equitable, any person authorized by central government or state government. The state government comes into picture also here. Otherwise, it is more of the central government. So, but if it is on just an equitable ground, then the state government can also come and authorize a person to file an application. So in general, if you want to understand how many people can come in, so there is the company itself, the shareholders, registrar, shareholders means the contributories, the registrar, and a person authorized by central government or state government. So 4 types of people: the company, the contributories, the registrar, and person authorized by central government or state government. They can apply for winding up. Again, remember, creditors do not come here. Remember this point, very important, because this could be a case-based scenario where a situation could be created where we have the situation where the creditors scenario would be given that creditors want to claim certain amount from the company. Then they can ask you a question that what the creditors should do. Please advise whether they should apply under section 271 for winding up, or they should have any other recourse action for filing of liquidation of the company. So this demarcation in your mind should be very clear. Wherever you hear the word creditors, that IBC provision should be invoked in your mind. Now, contributory, as we have discussed, friends, is a person who has to contribute to the assets of the company. Now, even if he is holder of fully paid up shares, he is termed as a contributory, as we have discussed. It is not that if he is only partly paid up the amount, then he will be termed as contributory. No. Even if the company does not have any assets, and you know that you're not going to receive any amount, because the company does not have any asset, you will not be entitled to any amount in case of the process of winding up, but then still he'll be termed as a contributory. And even if the company has assets, but it does not have any surplus asset left after distribution of the amount to all the creditors, the company might not have enough amount to pay the contributories. Still, you will be termed as a contributory, and you will be entitled to apply for an application, friends. So contributory does not mean that you have to contribute, then only you will be a contributory. Contributory is when you are holding fully paid up shares, you don't have to do anything. You just sit, relax, and wait till all the assets have been disposed of and you are entitled for certain amount. But even if you are not getting any amount, you will be termed as a contributory till the end, until the company gets dissolved. So this is again an exam related matter where a scenario could be created where the question may be saying that company does not have any asset and there are more liabilities than the assets. Can the contributory is entitled to apply for winding up under section 271? The answer is yes, he is entitled to, even if these 3 conditions are being met. So certain things we have discussed, member versus contributory, and till how long that particular period will be counted as a member or contributory, that will cover under 286 when the period has been defined, that who will come under the list of contributories. So exam question, friends. Exam question. We have discussed who can apply for winding up. But a direct question: when can a petition be filed by registrar? Now, registrar can file, just one second. Yes. So registrar can file a petition for winding up under section 271. We all know, except for clause A, whereas SR has been passed. So that is up to the company. Now, when registrar is filing a petition, remember, he has to take a prior permission from central government. Very important. When can a petition be filed by a registrar? Note down the points. First, except for section 271A, the registrar is entitled to file a petition for winding up under section 271. You have to write this. The second point, you have to mention that he has to obtain a prior permission from central government before filing up for petition. Third point, he has to give a reasonable opportunity to be heard to the company before filing a petition. That means he has to send a notice to the company and informing the company that he is filing a petition. Do you need to say something? Because the company may be a running company, a going concern company. The company might have certain objections to the petition and might present their points. Right? So this is an exam question. When can a petition be filed by a registrar? Now, is this all what we have to answer, friends? If it's a 4-mark question, no. Please mention the conditions of 271. Say under which condition. So it will be 271 B, C, D, and E. B, C, D, and E. So you write down the B point, C point, D point, and E point. That what are the points under B, C, D, E. Mention the point A. That means you need to write down 271 in full and then write down the condition. So this is exam question. The next exam question, petition by a contributory. When? So shares in respect of which is a contributory, or some of them were originally allotted to him or have been held by him and registered in his name for at least 6 months during the 18 months immediately. The conditions for holding period. So he should be holding the shares. Either he should have been originally allotted to him, or he must have bought from somewhere else, from the market or from someone else. For at least 6 months, he should be holding those shares for at least 6 months during the 18 months immediately before the commencement of the winding up. So there could be an indirect exam question giving you certain dates, and they will ask you whether this contributory is entitled to file a petition or not. 18 months before the commencement of winding up. Now, what is the commencement of winding up? Remember, the commencement of winding up is the date when you file the petition for winding up. The day you file for the petition of winding up, that is the commencement of winding up. Please note it down. Please note it down, friends. Before the commencement of winding up means the date on which you file the petition for winding up. That is the commencement of winding up. From that date, you will count the 18 months. And during that 18 months, shares should have been registered in name for at least 6 months. Shares should have been registered in his name for at least 6 months. So either you must have originally been allotted, you must have applied or you must have bought the shares, or have devolved on you through the death of a former holder. So by virtue of any will, or you being a nominee, you have got the entitlement of that particular shares. So you have not been allotted originally, neither you have bought, but because of being your nominee, the shares have been devolved on you, and that shares have been held by you for at least 6 months during the last 18 months. Therefore, now you are entitled to file a petition. So this is again an exam slide, friends, for the calculation of the period of holding. Period of holding, remember. So let's say a typical exam question, which is always complicated. A is a shareholder. A is a shareholder. Where he is holding shares for 3 months. Which has been originally allotted to him. And after 3 months, by virtue of a death of a shareholder, he gets entitlement for further shares. And that period is again more than 3 months. So A is now a shareholder for how many months? 3 months plus 3 months. Will he be entitled to file a petition? The answer is yes. Original allotment, 3 months. By virtue of death of a former shareholder, 3 months more. So total is now 6 months. He will be entitled to file a petition. So that means now that 6 months has to be counted, taking every situation into consideration. Not individually, whether original allotment or have been purchased or by devolved on in through the death of former shareholder. No independent. They can be all be clubbed together. And this is how the exam questions are framed. I hope it is clear. Sairam, I could not get your question. Means shareholder holding minimum 2.4 years before winding up? No, not 2.4 years before winding up. It is said that 18 months, during the last 18-month period, which we have to consider, and during that last 18 month, he should be a holder of that share for at least 6 months. So that is not 18 plus 6. Please get, I hope it is not, it is clear to you. It is not 18 plus 6. It is during those last 18 months. Within that last 18 months, you should be holding the shares for at least 6 months. So I hope it is clear to everyone. The next exam question. We all understand the petition can be presented by the company when the special resolution is passed. Now, along with that, when the question is asked in the exam part, when can a petition be presented by the company? So you start with under section 271, when a special resolution is passed by the company that the company may be wound up, the petition can be presented by the company. First point. Good. Along with the petition, a SOA has to be prepared. SOA has to be prepared, a statement of affairs in such form, in such manner as may be prescribed. So here, such form and such manner, the winding up rules mention such form and such manner. So they have to file a statement of affairs. So that is the second point which you have to mention, a statement of affairs. Now we all understand what is a SOA, which consists of basically giving details of the assets and the liability part. So you have to file a statement of affairs. Now, statement of affairs, if certified, it's good. So that is the second point which you have to mention. The third, you have to file a copy of petition with the registrar. That is the third point. Then only your answer will get completed. It's not only about mentioning that SR is passed. No. So you have to file a copy of petition with the registrar. And then the registrar will submit his views to the tribunal within 60 days of the receipt of such petition. So friends, remember, under 271 and 272, there are so many possibilities of questions which can be asked. One question purely on the basis of what is just and equitable grounds. Second question, when a contributory can apply. Third question, when a registrar can apply. Fourth question, when a company can apply. And fifth question, simple, what are the conditions, trigger points for winding up the company? So 5 questions could come from this 2 section only, 271 and 272. Because these are the trigger points, friends. Most of the arguments and disputes litigation will come only out of this 271 and 272. Great. Now, once the petition has been applied, what will the tribunal do? What will be the tribunal do? And we all understand there are so many tribunals now in existence across the country. So each state is being, for each state there will be one tribunal. The process is on to constitute tribunal for each state. There are about 15 tribunals which are currently running, around 15, plus minus maybe some number. And I'm sure with the passage of time, where more business, more companies are being formed, then there'll be a tribunal in each state. So the tribunal, what will the action be taken by the tribunal? First, dismiss the order with or without cost. With or without cost means they can mention that you have to pay 10,000 as a cost to A person, B person, C person, or whatever. So they will dismiss the order, not passing any order, and say the company is not entitled to be wound up. So tribunal thinks that yes, it is wrong. The company should be running. Company has a business and it should be wound up. When will it think like? Just a situation where there could be an objection to the petition by the workers, friends, by the workers. The workers will come, the employees will come and say, the petition has been wrongly filed. I raise an objection to this petition, will be affected, our life will be affected. So therefore, do not pass any order. The company is running, it has its business, it has assets. So in that scenario. Second, it can make any interim order as it thinks fit. Make an interim order, it may say that, okay, if there is an operation in mismanagement, let us change the management. Let us change the management and let us appoint a new management, new director, new board, and let them run the company. And then once the company is running, and then we'll see if it is required to be wound up or not based on that report. In many cases, it has happened. In case of Satyam, or let us in case of ILFS, a lot of interim orders have been passed. Instead of winding up the company, they have instituted a committee, changed the board, and they're waiting for the final reports of the committee. So they can make any interim order as it thinks fit. Third, they think, yes, the company is fitting into the process of winding up, but still they would require certain time before passing the final winding up order. But to ensure there's no fraudulent activity which can be carried on during this particular time period till they make a final order, they may appoint a provisional liquidator. They may appoint a provisional liquidator. Right? So instead of changing the management, they think that no, it is time to appoint a provisional liquidator. So a provisional liquidator will be appointed. Great. Or they can make an order for winding up with or without costs. They can say, okay, now fine, nothing doing. Let's wind up the company. There's no such reason that why the company should keep on running, and let's close down the company. So that is the final order which may come in, and the company may be wound up. So these are the 4 scenarios, friends, the 4 orders which the tribunal can make. Now, this order has to be made within 90 days from the date of presentation of the petition. From the date of the presentation of the petition, friends. That is the time limit which has been given. Now, you always wonder whether these time limits are followed strictly. The answer is no, friends, because it is a legal matter. A lot of pleadings, arguments, requirement of documents, fulfillment of the conditions of NCLT rules. So it takes a lot of time. It's not that it happens within 90 days. It goes beyond 90 days. It may take about a year or so before the final order of tribunal comes in. So before appointing a provisional liquidator, the tribunal shall give a notice to the company and given reasonable opportunity to be heard to the company and to make any representations if required. So from exam perspective, what are the possible questions? First possible question is, friends, what are the orders of tribunal? What are the orders of tribunal? So you mean to mention 273? Then who can be a provisional liquidator? Who can be a provisional liquidator? And when can provisional liquidator be appointed? These are exam questions. So obviously, when can a provisional liquidator be appointed? We can very well mention that as per the tribunal, till the making of final winding up order is done, the tribunal thinks it is important to appoint a provisional liquidator. They will appoint a provisional liquidator. Who can be a provisional liquidator? We'll see, we'll understand that. Certain scenarios, just for the point of discussion part. Um, see, tribunal shall not refuse to make a winding up order only on the ground that the assets of the company have been mortgaged for an amount equal to or in excess of those assets, or the company has, or that the company has no assets. That means bank can come and raise a point today. See that the company has certain assets, and those assets have been mortgaged to the bank, and the company has certain liabilities, and maybe the value of assets are more than the liabilities. So therefore, the company should not be wound up. Or the other scenario could be the value of the assets are less, so therefore the company should not be wound up. So the moot point is, friends, whether the bank can come and raise a question, whether the bank can come raise any point regarding to the mortgage of the assets which they are having. So on that ground, can the tribunal refuse to make a winding up order? The answer is no. The tribunal will consider the points on merits and see whether it is just and equitable or not. The tribunal will think, yes, the company has not been filing returns for the last 5 years. The tribunal thinks that if in the interest of sovereignty and integrity of our country. So the point of consideration for tribunal is thus 5 conditions. 5 conditions. If the tribunal thinks that there is some malified intention, let's say when the company itself is coming and filing a petition for winding up, and there's a malified intention, the tribunal may, dismiss that petition, or they may appoint a provisional liquidator till the final winding up order is being made. But only because the bank has got a mortgage of the assets, it will not pass a winding up order. No, that is not the scenario. So remember, an exam question, a question could be framed in such a manner where details of liabilities and mortgage of assets are given, the details of assets are given, and the company passed a special resolution for winding up petition, and the question will be asked that whether the tribunal should consider the points of bank to accept the winding up petition or not. So answer is the tribunal will not consider the bank's point of view. If all the conditions are fulfilled, then they will pass a winding up petition, winding up order against the company. Again, very important, can tribunal act as a facilitator? The answer is yes, the tribunal can act as a facilitator where just and equitable has been a ground for winding up petition, where people think that there is a dispute deadlock, then the tribunal can come and ask for a mediator or appoint someone else to run the company, and it feels that it is unreasonable for the company to wound up. So therefore, there should be a solution. So the tribunal can make an order for remedy also. So these are other possibilities of tribunal, friends, along with what are the orders which we have discussed. The other possibilities are this remedy, and also this is one of the scenarios. Remember, friends, these are all exam related questions. From 271 to 273, we have seen so many options of exam questions being asked. Any questions so far. So I hope Geeta, you're getting the point. Sujata, Ramani, things are getting clear and there's no such point of confusion till now. Yes? Okay. Now, once the petition is in file and the tribunal has made certain orders, Section 274 is about statement of affairs. Now, exam question. Please note down whatever I'm saying. These are exam questions, the possible exam questions, friends. So the exam question is, when is statement of affairs a requirement for filing up a winding up petition? When is statement of affairs a requirement for filing a winding up petition? The first, when the company itself is filing a special winding up petition by passing a special resolution. So we have understood there is a condition that the company should file a statement of affairs. That is the first. The second, where a petition for winding up has been filed by any person other than the company. Petition for winding up has been filed by any person other than the company. And prima facie, a case for winding up the competition is made out when the tribunal thinks that yes, there is a possibility that yes, the company should be wound up. Then the tribunal shall make an order to direct the company to file its objections along with statement of affairs within 30 days of the order. So there are two scenarios where SOA has to be filed. Two scenarios where SOA has to be filed. First, along with the petition when the company itself is filing a petition. Second, when the tribunal will make an order to the company to file a statement of affairs along with any objection, when the petition is being filed by any other person other than the company. Correct? So two scenarios, friends, where statement of affairs has to be filed within 30 days of the order, plus an contingency of 30 days more in case of special circumstances. So what happens if I'm not filing the statement of affairs? Not a problem. There are always penal provisions. So when they fail to file the statement of affairs, the company forfeits the right to oppose the petition. Company forfeits the right to oppose the petition, and the directors and officers shall be liable for punishment for non-compliance. Third point, the directors and other officers of the company within a period of 30 days of such order submitted the cost of the company, the books of accounts of the company, completed and audited up to the date of order to such liquidator and in the manner specified by the tribunal. If the winding of order is under section 273(1)(d). winding up order is under section 273(1)(d). What is 273(1)(d), friends? This is 1D, where the winding up order has been made. So when the final winding up order has been made, then within 30 days of the order, the officers of the company and directors have to present the audited books of the account up to the date of the order. When the statement of affairs has to be filed, remember, the order has not been made. The final winding up order has not been made. Then SOA has to be filed along with the objection. But once the final winding up order has been made and a liquidator has been appointed, then within period of 30 days, we have to submit the audited books of accounts. So there's a difference between SOA and audited books of accounts. So SOA is purely a statement signed by the management giving to the tribunal. And audited books of accounts is the audited books of accounts signed by the auditor given to the liquidator after the winding up order has been announced. I hope it is clear, friends, the difference of submission of audited books of accounts and statement of affairs. Right? So if any contravention is there, we have seen there's a punishment. So punishment may be imprisonment of term which may extend to 6 months, or with fine not less than 25,000 and up to 5 lakhs. And the complaint has to be filed before the special court by registrar, provisional liquidator, company liquidator, or any other person authorized by tribunal. So special court will be created, and under special court, the complaint will be filed that yes, the officers and the directors are not complying with the order of tribunal. So 274 gets completed where the tribunal has given the order and the statement of affairs has to be filed. So 271, remember, conditions for petition. 272, who will file the petition. 273, the orders of the tribunal. And 274 is preparation of the SOA and the audited books of account. Now we come to the appointment part, friends. Appointment. Appointment of whom? So appointment of the liquidator here. So as a professional, as a chartered accountant, probably we'll be looking to this particular section more importantly, because we have got a chance to be appointed as a liquidator. So types of liquidator, friends, just to give you a brief scenario understanding before we jump into this particular section. So we have the provisional liquidator, we have the company liquidator, and we have the official liquidator. So we have been hearing the word provisional liquidator and the company liquidator so far. Provisional liquidator, tribunal may think that before the final winding up order is being made, till that final winding up order, let us appoint a provisional liquidator. Once the final winding up order will be made, then the company liquidator will be appointed. And there is another term known as official liquidator. Before the IBC provision came into action, or before they were notified, there was only one liquidator, that is the official liquidator. So under Companies Act, the liquidator who was appointed was termed as an official liquidator, and he was a person nominated by the government. And each tribunal or each regional directorate, RD office or ROC office, had one official liquidator attached to it. So he was a person of government stature, government passed the respective examination of the government. But after the IBC was notified, we have new kind of people who can be appointed as the provisional or company liquidator, and they can be any person, chartered accountant, company secretary, cost and management accountant, having a minimum experience of 10 years, plus you must have qualified a particular exam. So once you have cleared that exams, you will be eligible to be appointed as a provisional liquidator or a company liquidator. So there is this opportunity for all of us to become a liquidator of a company, and it's a very esteemed job, highly privileged job with a lot of responsibility because you are taking care of assets of a company on behalf of the government to be distributed to the creditors. So friends, the first person to be appointed who could be the provisional liquidator when the winding up petition has been filed until the final winding up order is passed, where the tribunal thinks that there could be certain malified intentions of running the business, there could be possible fraudulent transaction, then the provisional liquidator may be appointed. Provisional liquidator appointed. And when the final passing up of winding up order is done, the company liquidator may be appointed. And from where are they going to appoint? Friends, they are going to be appointed out of a panel maintained under the IBC code. There's a list of insolvency professionals which are available with the tribunal. So every 6 months, this panel gets updated. This panel is maintained by IBBI, and this IBBI sends this panel to the respective tribunal. And from that panel, the provisional liquidator or the company liquidator is appointed. I hope it is clear, the appointment part, friends. What is the exam question? The exam question is, who can be appointed as a provisional liquidator or a company liquidator, and when? Who and when? So first, let us understand when. When a petition has been submitted and the tribunal thinks that it is a certain events can happen. That event could be the nature of fraud, malified intention. So till the final winding up order is passed, a provisional liquidator can be appointed. So this is when. Second, when the final winding up order is passed, a company liquidator is appointed. That is when. From where? Both will be appointed out of a panel maintained under the IBC code, maintained by IBBI, and that panel is sent by IBBI to tribunal, and from that panel, the provisional liquidator or the company liquidator can be appointed. Is this clear, friends? When provisional liquidator and company liquidator is appointed, and who will be appointed, when and who, when is the time, event, and who out of the panel. The next question, can a provisional liquidator be appointed as a company liquidator? Can a provisional liquidator be appointed as a company liquidator? The answer is yes. So let's say initially the person X has been appointed as a provisional liquidator till the final winding up order is being made. So once the final winding up order is done, the tribunal can appoint the provisional liquidator as the company liquidator. That is a possibility. Along with that order of appointment, what additional orders can tribunal pass? So the tribunal can restrict the power. Power of whom? The company liquidator? No, provisional liquidator. Because he is a provisional person for a particular time period. So the tribunal can restrict his powers. And what are the powers? We'll study. We'll study the powers later on. What are the powers of the provisional liquidator? So they can restrict his power. Or they can mention that you have all the powers which are available to the company liquidator. That is also fine. And they can define additional terms and condition of the appointment along with the fees which is payable to him or her, which will be specified by the tribunal. And that fees will be based on the performance, experience, qualification of such liquidator and the size of the company. Based on those conditions, the fees will be decided by the tribunal. So these are additional orders. So this is again an exam question. While appointing the provisional liquidator, what additional orders can tribunal pass, or what point should the tribunal consider while passing the orders of appointment of provisional liquidator? So the things which you have to mention is that the tribunal can restrict his powers because he's a provisional person till the final company liquidator is appointed. The tribunal can also provide him all the powers which the company liquidator will have, and plus the fees and the task may be defined by the tribunal. So once appointed, will he be appointed till the end of the time? The answer is no. The answer is no. So you should not think that, yes, I've got now the supreme power, I can do whatever I want. The answer, no, you should comply with the law. Otherwise, you can be removed. So the exam question, when can the liquidator be removed? When can the liquidator be removed? So these are general points. I think very well we can remember these points. The grounds of removal are when we are involved in certain misconduct, when we have conducted any fraud or loss of faith, certain kind of professional incompetency or failure to exercise due care in the performance and the powers of the functions. You're not running the business or not taking care if the business is running, not running the business if the business is not running, you're not taking care of the assets of the company properly, or whatever has been defined under the act, that you have to prepare report, you have to conduct meeting, you have to call for the meeting, you are not doing that. Or there's a conflict of interest. So the conflict of interest is always could be there. It can arise later on also. So one is misconduct, fraud, malified intention. You're not competent enough, not taking care of the assets of the company, not performing as per law, whatever is required under the law, and lack of conflict of interest. So again, exam question, these are direct questions, so no complication, direct 5 mark, 4 mark, score 100%. There may be another scenario where the new liquidator can be appointed, because in the event of a death or resignation or removal of the provisional liquidator, the tribunal may transfer the work assigned to him to another company liquidator for reasons to be recorded in writing. So this may happen because of certain reasons also. Yes, very important, friends. If any damage has been caused, that any liquidator is responsible for causing any loss or damage to the company, the tribunal may recover or cause to be recovered such loss or damage from the liquidator. Big risk involved from the liquidator aspect. So as I said, very prestigious job, but yes, with a lot of responsibilities. And obviously ROBH, a reasonable opportunity to be heard will be given to the liquidator. So 276, I think, removal of liquidator. 277 is not so much of importance. It is more of a procedural section, so you can give it a pass. But yes, when the tribunal gives an order of appointment of the provisional liquidator, then the intimation has to be given to the provisional liquidator plus to the ROC, and the ROC will record the same and notify an official gazette, also inform at the stock exchange. So this tribunal order has to be communicated to everyone, and including ROC, and if it's listed in the form, the stock exchange. And very important, this is the important part. This tribunal order is taken as a notice of discharge to all the officers and the employee of the company, that now, yes, it is over. The company is now being wound up. You are not required, except if the company is running, business is running, then they will be required. So obviously in that case, they will not be discharged, but otherwise they will be discharged from the offices of the company. This is again important exam question, winding up, company friends. So we're going to start this winding up after a short break. So we'll meet after about 7 to 8 minutes and then start up with the winding up committee. So we now have seen the liquidator has been appointed. Now the liquidator job starts, right? So the action now shifts from the tribunal to the liquidator. So we'll rejoin after 7 to 8 minutes. query do you have, or should we go ahead with the next provisions? So friends, the liquidator is now here sitting in the company, and he has to take the job. So let us understand the major job of the liquidator. Now, once the liquidator is appointed, apart from taking over the different kind of assets of the company and taking over the control, he has to make an application to tribunal within 3 weeks. Within 3 weeks from order of winding up, for constitution of winding up committee. Winding up committee. Very important. So exam question, friends. Exam question is, first, when will the winding up committee be constituted? First question. So there's a time frame. So we understand that. The second exam question will be, who will be the members of this winding up committee? Who will be the members of the winding up committee? So, important thing to be noted here. Official liquidator attached to tribunal. Remember, we had discussed this word, official liquidator. So there's a company liquidator, which is appointed by tribunal. And there's an official liquidator. Now this official liquidator is attached to each tribunal, as we have discussed. So he will be part of this winding up committee. Nominee of a secured creditor. So if there's a bank who has given a loan to the company, so the bank will appoint a nominee. And any other professional appointed by the tribunal, let's say a valuer, a chartered accountant, a legal expert, a lawyer, whoever the tribunal thinks fit to be part of this winding up committee. Now, so what is the role of the company liquidator out here, friends? The company liquidator will be the convener of this winding up committee. That convener means that he will call up for the meeting of this winding up committee, and he will present a monthly report to the tribunal along with the minutes of the winding up committee till dissolution. So that means probably he has to call up a meeting for winding up committee every month, discuss the status, the steps, the activities being taken by him for the dissolution of the company, and present to the tribunal the minutes of the meeting of the winding up committee every month. So the liquidator, the company liquidator, has the job of convening the meeting. He's not part of that committee. So the committee is now over and above the company liquidator, and probably that committee will take and supervise the process, the steps, not control, but yes, they will monitor the progress of the winding up. So the task of the winding up committee. Yeah, the task of the winding up committee. So the task of the winding up committee is to ensure the takeover of the assets, examination of the statement of affairs. Remember, who is going to give the statement of affairs? Recall 274. 274. If the company itself has submitted the application, they will be submitting the application along with SOA. And if some other person has filed, the tribunal will give the order to the company to file a SOA. Recovery of property, cash, or any other such a company, including benefits derived therefrom. That means, let's say the company has given a particular property on rent to someone else, and will recover that particular property along with that rental income which has been due from that particular person. So recovery. Review of audit reports and accounts of the company. Remember again, the company has to submit an audited account. So review. Other functions as the tribunal may order, whatever functions the tribunal may give from time to time. Other. Realization of asset. That means you need to sell the asset, recover, realize the money. So the process of selling the assets are compromise, abandonment, and settlement of claims. So if any possibility is there for compromise of the claims, abandonment means the claim should be rejected. So compromise. Payment of dividend, if any. Obviously, there's remote chances, but yes, whatever the scenario may be. P. And finalization of list of creditors and contributories. So, CPF. So, one word. And two words. This word is clear, I think. You can very well understand the meaning of this word. And CPF is company petition final. Company petition final. After that, so let's say if they have created this, they have done this job. The final report on dissolution by company liquidator will be approved by the winding up committee. So once everything is done, a report will be prepared by the company liquidator. It will be submitted to the committee who will give their consent for submission to the tribunal by the company liquidator for dissolution order. So before the final petition is filed by the company liquidator to the tribunal for winding up, it has to be approved by the winding up committee. So that is the job of the winding up committee. Direct exam question, 4 to 5 marks. Very simple, no complications involved. Friends, by this time you will be now getting a grip on the winding up process, and I'm sure you'll come to know that if you go step by step, the process is very clear. Pick up the important points, strategize for your exam preparations, and make it a point that don't try to leave this topic. Don't ever try to leave this topic because it is very scoring. And as it happens, as I've seen in last 25 years of my CA experience, I've seen that people passing out only by covering those topics which are normally ignored, which are given the last priority. And remember that 80-20 principle. Your 80% of the marks will come from your 20% of your major topics. So if you focus on those, small topics, economic laws, IBC, winding up, miscellaneous provisions, SEBI, you will see your 80% of the marks coming from these topics. The main topics will never give you marks. It will only boost up your confidence level. So effect of winding up order. So once the winding up order is done, what is the impact of the winding up order to the company, to the stakeholders, to the shareholders, to the creditors? So the impact will be felt by everyone. Even if the petition has been made by any person, that it will be, applicable to everyone, be the creators and the contributors. Even if one contributee has filed it, it will be applied to everyone. So the major impact is that, and moratorium. So the word moratorium comes in. So whenever the winding up order has been made or a provisional liquidator is appointed, no new suit can be instituted against the company. That means no new case can be filed against the company. And all the pending suits, the cases, can only continue after the leave of tribunal, and any leave application can just after the permission of tribunal has been taken. And if that permission has to be granted by tribunal, you need to make an application to the tribunal, and tribunal will dispose out in 60 days. So remember, so no new cases can be filed against the company. All pending cases will continue only after the order of tribunal. And to get that order, you need to apply to that tribunal, and the tribunal will dispose out of in 60 days. But remember, if any case is pending at High Court and Supreme Court, tribunal cannot order for a case which is pending at High Court and Supreme Court. They are boss. Right? So to that extent, obviously that will apply, except when the High Court and Supreme Court itself gives an order, that's fine. So the company may apply to High Court and Supreme Court that the now company is under winding up process. So please do not let this suit continue. And if you want to continue, please give a specific order for the same, so that the same thing can be incorporated, presented to the winding up committee, and the winding up committee can take the next course of action. This is actually the process to be followed. Anyway, so the exam question is, what are the consequences of winding up order? So consequences, it shall operate in favor of all the creditors and all contributors of the company, even if it has been made out of a joint petition of any creditor or a contributory, or if any one contributory has made it, so it will, the impact will be felt by all. Then the jurisdiction with respect to that particular case, the tribunal, again, not that much important from exam perspective. So just to the extent of reading it off, the tribunal will have the jurisdiction to entertain or dispose of any case or proceedings by or against the company. It will have that jurisdiction. Any claim made by or against the company, including claim by or against any of its branches in India. So even if the branch is situated outside the state where the tribunal is located, the jurisdiction will be within that particular tribunal. So any application made under 233 fast track merger. So any question of priorities or any question related to assets, business actions, whatever, it will all come under the tribunal jurisdiction. So anything which is related to the company will fall under the jurisdiction of the tribunal. This is the important part, friends. An exam question. Report of the liquidator. Very relevant, very important. The major job of the liquidator. So 281. So remember the exam question, what are the responsibilities of the liquidator? First, file an application to tribunal for forming of the winding up committee. First job, remember, that's very important. He will be the convener of the winding up committee meetings, and Third, he has to present the monthly report to the tribunal of the winding up committee minutes. The next important part which comes in is the report of the liquidator. The liquidator has to prepare a report within 60 days and submit to the tribunal. What he has to submit? Details of all the assets of the company along with the location, the value, the cash balance and the bank balance and all the instruments held by the company. Basically, it is an indirect way of presentation of the assets and the liabilities, the balance sheet items. So remember the balance sheet part. Only thing is the valuation of the asset shall be obtained from the registered value. That means instead of taking the book value, he has to take at the valuation determined by the registered value. That's important because he has to take the current value, the fair value. Then on the liability part, he will take care of the capital issued, subscribed and paid up, the existence and the contingent liability of the company, all the secured and unsecured debts and every detail. So the liability part is taken care, the asset part and the liability part. The loans taken by the company, guarantees, the list of contributories that we again discussed, the list of contributories, intangible assets. So just take care of the balance sheet items, including the contingent liability, right? All contracts, joint ventures, collaborations, holding subsidy, all investments will be there. Legal cases filed by or against the company, so that will be given in the notes of the accounts. Obviously, if not disclosed, then some from other sources you can get the details of legal cases or any other information. So how do I remember that? Remember all the balance sheet items plus the contingent liabilities, including the guarantees part, legal cases, joint ventures, holding subsidies, collaborations, and contracts which are pending. I hope you will be able to recall these points. Don't need to create a mnemonic for the same. The other mnemonic, remember? Company petition final and the first word. That was easy. Winding up committee. Here, I think it's more of the balance sheet part. Now, when the report is prepared, very important. The company liquidator shall include in his report the manner in which the company was promoted or formed and whether in his opinion any fraud has been committed by any person on his promotion or formation of the officer of the company in relation to the company since the formation thereof. So the company liquidator will go to the crux, the source, the root of this particular company, why this company was created, what was the intention of creating this company, was the intention just to commit a fraud, where you see now so many news item coming newspaper that this company was formed, the people came together, formed this company, and then collected money from public and then they ran away. So what was the intention, just to collect money and not to do any business? Was that the intention? The basic nature of business model was wrong because that was not allowed, that was illegal. The way it was being created, the way the people came together, the way they collected, that was wrong. There were so many companies which came and say that you will plant a tree, a golden tree, a tree of chandan, and then you will get so much of return. Wasn't it basic intention being to commit fraud, collect money? So that means the company liquidator has to create an opinion on the basic intention of the promoters that they wanted to commit a fraud. This is a very important angle, because this report can be a source of so many consequential things. So many consequential things, friends. Further, he has to make a judgment on the viability of the business of the company for future. Very important. Again, viability of the business of the company. If the company is running, he has to make a judgment on the future viability of the business. And if he thinks fit, make further report or reports. So very important, friends. Exam question, 4 to 6 marks. The contents of the contents of the company liquidator report. Balance sheet, contingent liabilities, legal cases, all information about the joint ventures, contracts, holding, subsidiaries. That's the main part, including the liability of debt, loan taken. And remember, all the values have to be taken at the current value, that is from the, not the book value, but the valuation done by registered values. Then along with that, two important things, which is basically creating a source for further actions. Remember, what could be the further actions? If there's a element of fraud element here, the tribunal, he will give his report to tribunal, and the tribunal, based on the report of the liquidator, may give a direction to the government to conduct investigation 210, 212. There could be a lot of possible consequences, right? So all these sections are interlinked, friends. So when we read 210, 212, and understand, yes, okay, based on the report, based on the tribunal order. Why will the tribunal give an order? The tribunal will give an order because the company liquidator has mentioned in his report about a fraudulent nature of activity. So therefore, the tribunal is giving an order. So sometimes things have to be correlated. And that is what is required out of a professional. And when you read the overall act, taking together in holistic point of view, then you connect the dots. When you read independently, then it is difficult to connect the dots. So sometimes, first, obviously, the reading has to be independent. Then somebody has to be there to give you a guidance. Okay, read this with these dots and try to connect it. And that's where the importance of a mentor comes in, friends. So balance sheet, fraud report, viability report. So you submit a report to the tribunal, fine. What will the tribunal do? Again, directions of tribunal, very important. The tribunal, okay, your report has been accepted, fine. Let me go through the report. And you understand, the tribunal will say, okay, you need certain time for completing the whole process because you have so many assets, you have so many cases which are pending, litigations are going on. Let me see the time limit for completion of the entire proceedings. And if needed, I will revise the time limit for ABCD reasons, maybe the economical reasons. Then after understanding the report and listening to the creator's point of view, the contributories, or any other interested person, they can order, yes, the company is running. Why not sell the company as a going concern? Because in that case, more value could be realized. So it is better to sell the company as a going concern. So that order may be given. Because here, remember, the third point, the liquidator may give an opinion on the viability of the business. So based on this report, the tribunal may give the order of running the company as a going concern. And again, based on this point number 2, that a fraud has been committed, It may give directions for investigation under 210. And it may also direct the company liquidator file a criminal complaint. Go file a criminal complaint wherever required. So three things, friends. What the tribunal can do. First is time limit. Revised time limit. Going concern. Remember two questions. Orders of tribunal in view of the petition filed for winding up. What are the orders tribunal can give? Provisional liquidator, winding up order, dismiss the petition or take any interim remedy. Here, orders of tribunal after the liquidator has given a report. So there are two orders of tribunal. One is 273 and here is 282. And fraud. So TGF, GTF, FGT, whatever you want to term. The tribunal may make further order for taking such steps to protect the, preserve and enhance the value of the assets of the company. That is very natural. So it may give standing instructions that all measures should be taken by the company liquidator to ensure and protect the value of the assets. Let's say exam question could be, the official liquidator appointed, that is the company liquidator, appointed a forensic auditor based on recommendation of winding up committee. The report of the auditor unearthed certain fraudulent transactions and the same was part of the liquidator report. Please highlight the next course of action to be taken by respective authorities for determining a case against the directors of the company. What could be the possible consequence and action? So this is now a comprehensive scenario-based question which can be asked in the exam. Comprehensive, covering different angles. So here I have given the scenario. This could be further enhanced. Yes, what is the job of the company liquidator once he is appointed? So the job is, and then consequently, if certain fraudulent activities could be noticed, what should be the possible course of action by the official liquidator? So in that case, we can do the job that the liquidator will first appoint a constitute a winding up committee, present his findings to the winding up committee. The winding up committee has the responsibilities, the 10 responsibilities which we have discussed. Then one of the responsibilities of company liquidator is to report in the liquidator report, which has to be prepared within 60 days, is to find whether the conduct of the business, the formation of the company was fraudulent or not. So once it has been determined as fraudulent, he will prepare in his report and submit to the tribunal. So tribunal, after determination that whether fraudulent activities had been carried on or not, so they will take a prop deduction and give an order. Order of what? Further investigations under 210. 210. And after 210, what is going to happen, friends? Remember, after 210, report will be prepared under 223. Remember 223. Reports of the investigating agencies. And actions will be taken under 224. Actions will be taken under 224. Right? So that is 282 for all of you friends. 283, which is again a very natural outcome of any order of court where the affairs of the company will now be taken over by the some other person, if it is the liquidator or any other person under the IBC code, is to take over the custody of the company's property. Take over the custody of the company's property. So wherever the winding up order has been made or where the PL has been appointed, then all the assets, the custody or control of all the properties, effects and actionable claim will be transferred to the company liquidator and provisional liquidator. It should become effective from the date of winding up order. So the day the winding up order has been made, all custody should come from that particular date. If during the course of the process of taking over the asset, the tribunal at any time after making of the winded order require any contributory for the time being on the list of contributories and any trustee, receiver, banker, agent to pay, deliver or to the company liquidator any money, property or books in his papers under his control, then the tribunal may order to pay the same. So if anything which is to be paid by any person, then the tribunal will give the direction that please pay that amount to the company liquidator. So again, so examples could be, unpaid amount on share capital, that is by the contributory. If any assets are with the employees, lying with the employees, let's say you have a quarter residential houses prepared by the company, but then where the employees are staying, you have certain assets lying with the employees, let's say laptops. We have the assets mortgage with the bank, so they may call for all the assets and this should be handed over to the company liquidator. So again, to have a holistic view, friends, 281 report prepared by the liquidator. 282, the tribunal considers this report. And 283, the tribunal gives in orders based on the report. That if there's an asset which is lying with someone, then please now hand over the assets. Very natural, friends. Specific instructions to all the directors, employees, officers associated with the company to extend full cooperation to the company liquidator. And they are not able to do it, then punishment with 6 months or 50,000 or both. So just again, need to remember that support has to be given. That's very natural. And if no support, the penal consequences will be there. Yes, now this is important, friends, and settlement of contributories, 285, section 285. So once the winding up order has been done, the tribunal will settle a list of contributories. And if any rectification is required in the register of members, then the rectification will be done. So let's say, what is the kind of rectification? So there are a lot of cases, a lot of scenarios where the membership has not been transferred. The shareholders have not transferred the shares in their name. And once the notice comes of winding up and claims are invited, then you can very well apply to the tribunal that, yes, I have purchased these shares, but my name has not been registered as a member because of A, B, C, D reason. please do the rectification in the register of members. So the tribunal will take a call and decide, yes, whether this rectification should be allowed or not. And the final list of contributories will be prepared. And then give the direction that the assets of the company to be applied for the discharge of all the liabilities. So that will be done. So let us understand the word contributory more in detail, because this would be an exam question, friends. So the exam question is who are contributories? So by definition, contributories are those people who are liable to contribute to the assets of the company in case of winding up. Contribute to the assets of the company in case of winding up. So they are contributories. So that is why the meaning that, remember, contributories are not defined as the members, but they are liable to contribute to the assets of the company. So in case you have a partly paid up, you are a holder of a partly paid up shares, then means you have to apply, you are termed as a contributory. So fully paid up people are not termed as contributory, they are also termed as contributory. So contributory are two types: the current member, holder of partly paid up shares, as I mentioned, and current member, holder of fully paid up shares without liability, but will have right as a contributory. Will have right as a contributory means once the assets are distributed, you will have a right over the assets if something is left after being distributed to all the creditors. So contributory are termed as current member as well as past member. Very important. Past members are also termed as contributory. Past members are also termed as contributory, friends. Past members. So here is an exam question. Please mark it. Important. Past members, when they will be termed as contributory. Current members, holder of partly paid up shares, holder of fully paid up shares, both are contributories. Exam question. Who are termed as contributories? Definition: those who are liable to contribute to the assets of the company in case of winding up. That is the definition. So in the definition, you will say that yes, current member who are holder of partly paid up shares, current member who are holder of fully paid up shares, and past members are also included in the list of contributories. Past members who were members in last 1 year. In last 1 year, they are termed as contributories. Member who ceased to be a member greater than 1 year. A member who ceases to be, So the list of contributories will be prepared by the liquidator in his report, in which he will distribute the contributors into two parts, list A and list B. List A is present members, list B is past members who were members in less than 1 year. NCLT will settle the list. So this list A and list B is prepared. List A and list B is prepared. Then NCLT, once it will prepare the list, will approve the list, okay, that these are the current members and these are the past members, list A and list B, who are liable to contribute to the assets of the company. So the past member will come and raise an objection that why my name is included. So as per the law, conditions when past members are liable to contribute. So as per the law, it has been decided, yes, the past members will be liable to contribute. When? So member who ceases to be a member greater than 1 year. Only when the present members are unable to pay, only when the present members are unable to pay, the past member is not liable for any debt after he ceases to be a member. So any debt which is arisen after he ceases to member, he is not liable. So any debt which was there in existence during his tenure, he will be liable. But is liable to only the unpaid amount if limited by shares and to unpaid guarantee if limited by guarantee. So exam question, when are past members liable to pay? First, when the present member are unable to pay. Only then. Which members? Members who cease to be a member greater than 1 year. They are termed as past members. Remember, this list is A and B. This is for members less than 1 year. And these are the past members who are ceases to be a member greater than 1 year. So when can the tribunal call from them the contribution? When the present members are not able to pay. So those members who are ceases to be, from those who cease to be a member greater than 1 year, but only for debts which was due only during that period, not for debts which arise after they cease to be a member, and only liable to the unpaid amount only to that extent. Now, you would be asking, sir, what is this scenario where the past member will come into action? Friends, for example, there was share issued to shareholders, ₹10 share, on which 5 was partly paid up by the past members. In spite of repeated call to those members, they did not make the shares fully paid up, and it was partly paid up. And thereafter, the company decided to forfeit those shares. The company decided to forfeit those shares. So the forfeiture was done, and their partly paid up shares was forfeited, and therefore they were not entitled to be a member of the company because the shares got forfeited. Now they are gone. They become past members. They become past members, friends. Thereafter, those shares were reissued. Thereafter, those shares were reissued to new members, again as a partly paid up share, again as a partly paid up shares. And then suddenly the company went into winding up. So the liquidator will prepare a list of contributories. He will prepare a list of contributories, current members from whom due is pending. So it will include the list of the current members who have made a part payment towards that particular shares. They are current members. He will also prepare a list of the past members who ceases to be a member, whose shares were forfeited. So first the call will be made to the current member. And when the current members are unable to pay, then the call will be made to the past member only to the extent of unpaid amount, that is ₹5, not for ₹10. Not for ₹10, only to the extent of only ₹5. I hope this example is clear. Yes, Mr. Sairam, it's a B list contributory, correct. Past members B list contributory, correct. So now you understand when the past member will be held liable, because there were scenarios where the past members did not pay the full amount. But why they are past members? They should be continued as a present member, but because their shares were forfeited, that is why they are regarded as a past member, not current member. I hope the point is clear. So example, the company went into liquidation, that is winding up. The liquidator finds that the assets are less than liabilities. He therefore calls on the contributories, including the past members as per list B, to contribute to the assets. The past members object to such requests and say that it is not as per the provisions of the code. Whether the contention of the past members are tenable, will the answer be different if it is about the present members? Well, in both the cases, the members are liable. So the call will be made to the present members to contribute to the assets to the extent they are liable to pay. And if the present members are unable to pay the amount, then the past members will be liable to pay. And any member who ceased to be a member greater than 1 year, but they will be liable to pay only to the unpaid amount and only for the debts which are due during his tenure as a member. Another example, practical, Mr. Khurana received a notice to deposit 30,000 as his liability towards his contribution for the shares from a liquidator of the company, which was ordered by NCLT to be wound up on 14/6/2019. Mr. Khurana ceased to be a member of the company from 13/11/2018. Mr. Khurana seeks your advice. So 14/6/2019, you count backwards till 1 year, you count backwards till 1 year. It comes to 14/15/6/2018. And he ceases to be a member on 13/11/2018, which is lying within 1 year. So therefore, the liquidator has got the right to call for the amount from Mr. Khurana as he was a member in the last 1 year. So he is part of the list B contributories. List B contributories. I hope it is clear, friends. Any confusion, please ask. Any confusion, please ask. So again, just to summarize in this Excel format, this is very much important. You can remember this summary. A person who has been a member shall not be liable to contribute when, if he has ceases to be a member for the preceding 1 year or more. So if he ceases to be a member before 1 year, he is not liable to contribute. If he has ceased to be a member before 1 year or more, not liable to contribute. A person who has been a member shall not be liable to contribute in respect of any debt or liability of company if such debt or liability contracted after he ceases to be a member. So he's not liable for any debt after he ceases to be a member. Very much clear. A person who has been a member shall be liable to contribute when it appears to the tribunal that the past members are unable to satisfy the contributions required to be made by him in pursuance of the Act. So whenever the tribunal feels that the present members are unable to contribute, then the past members will be called. And to what extent? Only to the extent of any unpaid amount. So conditions: past members, last 1 year has been member. Second, for only those debt during the tenure he was a member. Third, only when the tribunal thinks that the present members are unable to contribute. Fourth, only to the extent the amount was unpaid. 4 things, exam question, 4 marks. Remember this particular chart. So as things are liable on the members, past members and present members, same thing will apply to the director and manager, whose liability is unlimited under the provisions of the Act. In addition to the liability of as a contributory, along with that, he has got an unlimited liability being a director or manager. And any person who ceases to hold office for a year or more, he shall not be liable to make such further contribution. So same, within 1 year, if you are a director or manager, you are liable. Before that, you're not liable. And same for any debt after he ceased to hold office, he is not liable. And he will only be liable when the tribunal makes an order, deems it necessary that the old members, old directors and managers shall be liable to contribute. Advisory committee, friends. Again, relevant from exam point of view. Advisory committee. Purpose, it is to advise the company liquidator, just to advise, remember. One is winding up committee, the other is the advisory committee, just to advise the company liquidator and to report to the tribunal on such matters as the tribunal may direct. So if the tribunal thinks that you need a report, then they will give the direction to the advisory committee. How it will be formed? The liquidator is appointed. A meeting of contributory and creditors to be convened by the company liquidator within 30 days of winding up order. That means he has to convene 2 meetings. One is for the one, he has to prepare a report to the tribunal for creation of the winding up committee, and second, he has to call a meeting for the contributories for the advisory committee. So 2 things he has to make. Then based on the meeting, he will prepare a list of persons willing to act as a member of the advisory committee and then submit a list to the tribunal part. So here, the winding up committee has a proper definite structure. Here, it will be based on the outcome of the meeting of the contributory and the creditors, that who will be members of this advisory committee. So the composition is, there will be 12 members. Members can be contributories, creditors, or any other as directed by NCLT. But the chairperson shall be the liquidator, remember. The advisory committee meeting will be chaired by liquidator. While there in the winding up committee, he was the convener of the advisory committee, winding up committee. The advisory committee shall have the right to inspect to the books of accounts and other documents, assets, and the properties of the company under liquidation and reasonable time. So whenever they want to inspect, they can do the same. So the winding up process is initiated against Kohli Limited, and advisory committee is formed by the tribunal consisting of 13 members in order to advise the company liquidator. Is it correct as per Companies Act? The answer is no. It is saying 13 members. There should be only 12 members. Again, standard section, periodical reports to be submitted by the company liquidator to the tribunal at the end of each quarter in respect of the progress made so far. Fine. Based on the report, the tribunal make an order as and when required. So let's have some questions for all of you, MCQ based question. You can answer it on the query box if you are there. So following persons have the right to inspect the report submitted by the company liquidator and take copies thereof, extracts thereof from payment of prescribed fees. Creator of the company, contributory of the company, promoters and officers of the company. So the correct answer is so the correct answer is 1 and 2. As per Companies Act, winding up means winding up under Companies Act, dissolution of the company, liquidation under insolvency, bankruptcy code. We have discussed this. So it is 1 and 3. 1 and 3. Which of the following, which of the below mentioned are not the functions of winding up committee? Not the functions of winding up committee. Yes, assist and monitor the liquidation proceedings of taking over the assets and monitor the liquidation proceeding of sale of asset and monitor the liquidation proceeding for the examination of statement of affairs. So is it the function? Yes, this is the function. This is the function. This is the function. So this is not the function. So correct answer is fourth. What is the jurisdiction of tribunal? What is the jurisdiction of tribunal? To entertain or dispose of any suit proceedings on any claim made by or against the company. To entertain or dispose of any application made under Section 233, fast track merger. Any question of priority of any other issue, whatever law, facts relating to assets, business, action, rights, and so the correct answer is 4. All of the above. So submission of liquidator report, how many days? Question number 6. Please get me your answer. Write the question number and the answer. Question number 6 and then the answer. Please, everybody. Question number 6 and then the answer. So remember 281. $60 days. Remember 281, 60 days. So these are small parts which you have to remember from exam perspective, like MCQ part, 60 days. In what circumstances a company may be wound up on a petition under 272 by the tribunal? Company has by special resolution, has acted against the interest of the sovereignty, has made a default in filing a financial statement or annual returns. Remember the word or. 5 years, any of the above. I think this is a simple one. Everybody can answer it. Any of the above. Meeting of the advisory committee shall be advisory committee, not the winding up committee, not the winding up committee. Advisory committee shall be chaired by company liquidator. Which of the following matter the company liquidator should include in his report? Which of the following matter the company liquidator should include in his report? The manner in which the company was formed, the viability of the business, and the steps which are necessary to maximize the value of the assets, either 1 or 2 or both 1 and 2. Question number 10, either 1 or 2 or both 1 and 2. So both 1 and 2. Whether any remedy available to the creditors agreed by the decision of official liquidator? Yes, remedy is available. I think the only remedy they can do is may file an appeal to the tribunal for getting some order. Very simple one. The tribunal on reasonable cause being shown for reasons to be recorded in writing, remove the provisional liquidator as the case may be on certain grounds. Which of the following below mentioned ground cannot be considered as a ground? Cannot be considered as a ground for removal. So this is a ground, this is a ground. Independent working having no conflict of interest, this cannot be a ground. Third, yes. The promoters, directors, officers who have been in employment for the company, acting associated with the company, shall extend full cooperation to the company liquidator in discharge of its function. And if they fail to do so, what is the punishment? Remember 287, 26, sorry. Yes. 50,000 rupees imprisonment of 6 months and 50,000 rupees with force. So, second point. When a winding up order has been passed and a PL has been appointed, no suit shall commence if pending at the date shall be proceeded against the company except with the leave of tribunal. No application can be made to tribunal seeking for any proceeding pending in appeal before. We have discussed this. We cannot file and leave for cases which are pending at higher level, 1 and 2. So answer is only 1 and 2. So when can a winding up order not be called a notice of discharge? Obviously, we cannot say that you should leave the company when the business is running. So when the business of the company is continued. Powers and duties of company liquidator. Again, an exam question, friends. Powers and duties of company liquidator. So we can divide into 3 parts. RSB, BSR, same as CSR. So we have BSR. Business powers, obviously, because you are in charge of the business, you can continue the company as a business. So you will be given certain business power. Because you're part of a statute, you will be given certain statutory powers, and then the recovery powers, because you have to recover, realize the assets. So for carrying on the business, you need to carry on the business for the beneficial of the company. For that, you need to carry out execute any documents, deed, receipts, then you will do so. Then if you're required to sell the movable and the immovable properties and actionable claims of the company by public auction or private contract, you can do so. If you want to sell the whole of undertaking as a going concern, to raise any money, interim finance for the security of the assets of the company, you need to defend and suit legal proceedings, you need to invite and settle claim of creditors, employees, and distribute this proceeds, inspect the records and the returns filed with any other authority. So there's a whole lot of duties which are given for the, or powers which have been assigned to the liquidator. And you need to learn it step by step. That is why I differentiated into 3 parts. I'm not going to details of all these steps because these are very general steps which are listed down in any of the law when a person takes over the power of running the business. Certain things which are very generic, which you need to remember is this point, this point, this point. These are general, which are applicable to every place. This point. To do all action to execute, to institute or defend any suit, draw, accept, and make endorse any negotiable instrument. That means to draw any check, to take out his official name, letters of administration, sign letters on the behalf, and to take assistance from professionals. Along with that, because it's specific to winding up, so you need to take all steps for winding up distribution, and along with that, carry on the business to sell the immovable properties, to sell the whole of undertaking. So there are 2 parts, remember. One is to sell the undertaking as a going concern, and second is to sell the movable and immovable properties individually also. That may happen in case the company is not a going concern. So try to learn it by segregating the whole powers into different angle, and then it will be easy for you to remember. So no indirect question can be asked, so I'm not going to details, except that I've given you a broader outline that what are the powers and how the powers can be segregated. So if the liquidator thinks that he needs certain kind of support, then with the sanction of tribunal, appoint 1 or more chartered accountant, company secretary, cost accountant, legal practitioners, and for carrying out his function. And that person will give a declaration that he is not having any conflict of interest with respect to his appointment part. Now, if you have been given a power, obviously that powers have to be controlled in somehow. So this is an exam question. This could be a case-based scenario where control will be exercised on the liquidator. How this control will be exercised? Let us see. By the advisory committee. So this is an exam question. Right? So this you have to understand. This previous one was purely just trying to segregate and learn it. So this, let us understand. So the control will be exercised by the advisory committee and by the resolution of the creditors or contributors any general meeting. So advisory committee can give certain advice to the liquidator for carrying out his powers, or the creditors and contributors can meet in any general meeting and pass a resolution. Now, if there's a conflict between both, then this will override. For example, let's say the liquidator has gone, this is going to overrule. This is going to overrule advisory committee and the decision of the liquidator. The auction method. There could be different auction methods, friends. So once we understand the rules of the auction, then you will understand there are a lot of auction methods. So this is how the method of control over the liquidator will prevail. With respect to the meetings, advisory committee meeting or any other meeting, the company liquidator may summon meetings of the creditors or contributories on his own or on the request of the creditors or contributories. So when the meetings can be called, either the company liquidator himself calls and for the purpose of ascertaining their wishes. So let's say auction method he wants to decide. So instead of he deciding, he calls up the meeting of the advisory committee or the creditors or contributories and then call ascertain their wish so that there's no conflict. Or if the company liquidator is not calling any meeting, he may be directed by a resolution of the meeting of the creditors, or whenever requested in writing to do so by not less than 1/10 in value of the creditors or contributories. So if there's no such general meeting of the creditors or contributories, then few creditors or contributories can come together, provided their value is not less than 1/10 in total overall value of the creditors, and then they can give a direction to the company liquidator to call for meeting. So two sections which are very important. One is the control over the liquidator powers, how that control will be exercised. And second is when the meetings will be called by the company liquidator. At what point of time the company liquidator can call for the meeting of the creditors or the contributories. So there are two scenarios, one on its suo motu, other maybe by the resolution of the meeting of the creditors or the contributories, or if not, then 1/10 of the people, either of the creditors or contributories in value, may give a request in writing to the liquidator to call for the meetings. So this is another important section, friends. Again, a direct or indirect question could be asked based on the calculation part. So if any person is aggrieved by any act or decision of the company liquidator, he may apply to the tribunal, and the tribunal, based on the strength of the aggrieved party or contention, may confirm, reverse or modify the act of the company liquidator. So this is till 292, friends, where we have understood the powers of liquidator and the meetings when summoned by the liquidator. Then we have the smaller parts of 293 till 301, where we have small tidbits to be covered, friends. Hope till now the concepts are very clear, so that we can conclude for today's session. And in the next session, we'll meet up again and to discuss the concluding part of this particular part one, concluding part of part one. And then we'll take up the other part of recovery and distribution. So any questions which you have, you can raise it. Okay, Divya, thank you. I hope the holistic approach of winding up is now clear. How to approach difference between IBC and winding up, creators' right and the rights of others, contributories, concept of contributories, when will tribunal come into action, what type of orders will the tribunal give, who can apply for a petition, who is a provisional liquidator, who is a company liquidator, the report of the liquidator. These are all important aspects of this particular part. So thank you. So we have Divya from the Central Region coming out and attending the session. Great. So thank you all, and see you on 31st, I believe, with our next session. That is Monday.